This is Austin Real Estate Investing.
Austin Real Estate Investing.
We'll be discussing real estate investing in Austin, Texas, and bringing you experts from all different sectors of the real estate game. Your host, Jordan Moorhead, is a real estate agent and investor in Austin and is here to help you get started or to build your portfolio and explore new strategies.
Hi, this is Jordan Moorhead, and this is the Austin Real Estate Investing Podcast. Today we've got Paul Graham on, and Paul's going to come on and talk about what he's doing with real estate here in the Austin area, and also some really cool stuff he's doing, putting together energy deals and raising funds for those deals. Hey, Paul, how are you?
Doing well, Jordan. Glad to be here and glad to be in a cool house. It's hot outside.
Yeah, it even feels hot in my house right now, man. I don't know.
Oh, no.
Yeah, I know it's not, but this
feels
hot everywhere you're at right now.
Yeah.
Awesome, Paul. So before we get too far here, can you tell our listeners what's your favorite restaurant in Austin?
Yeah. So my favorite restaurant is El Alma off, I think it's like Riverside. But yeah, it's very difficult to get a reservation or just, wait around for it. But just the ambiance and like the upper part is great, and centrally located to a couple other fun spots. So fun date spot, fun hangout spot, great happy hour. Parking's always fun, parking up on that hill. It's just an experience. So
yeah, and that's right by Terry Black's too. So
yeah,
if you can't get in, you've got another option.
Absolutely. Or there's a like wine bar that's like across the street, catty corner near like the Carpenter Hotel. And so I've gone there to, kill some time, get a charcuterie board, maybe some wine, then head over and, have some Mexican food that has unique, just appetizers and entree dishes. It's just a unique spot. So that's why I love it.
Have you been to the place? It's directly across the street from El Alma. It's on the top of that hotel. Is that what you're talking about?
Yeah. It's so like Carpenter's Hotel's like, over around here. I can look at it. I save, for anyone who's looking visually, I have a bunch of pins of all the stuff I save, the places I go. So let me find out for you.
There's one right next door to El Alma, though. And
next to?
Right next door to El Alma. And there's actually a restaurant and bar on top of that. It's a condo / hotel building. I think it's both.
Okay.
But they're really cool views from the top of that restaurant. And it's escaping me the name of it. Their food was okay, but the views are amazing.
So House Wine is the place that I was talking about. But there's also Juliet Italian Kitchen, another block down the road. But yeah, just a lot of good opportunities. Peter Pan mini golf around there too. So like I said, good date spot, good hangout spot. If someone's visiting, I'll probably just take them to Terry Black's just because they can't stop talking about it. But if they want something different, then, I'll head there. So. Absolutely.
Love it. So Paul, real quick, can you just go over what you're up to and how you're involved with real estate investing in Austin here too?
What I'm up to, juggling right now, a lot of great things and exciting stuff. Specifically with real estate, though, of physical assets. I own a house in Austin proper that I house hack. And then I also have 2 short-term rentals that are, in the greater outside Austin area, but still accessible from the Austin market.
Oh, cool. And I know you're up to a lot of other cool stuff with these energy deals and raising funds for those. Can you talk a little bit about that too?
Yeah. So one of the partners at Sandstone Group, our focus is to be on energy and real estate to really just give information as well as help investors, capitalize on that information. So we run 8 podcasts right now related to energy. We're building up our real estate, podcast media company. We also run a energy news website called energynewsbeat.com and a real estate news website called Real Estate Investor News Pulse. Com. And so, with those resources, investors, or even industry professionals in those sectors, really just get a diversified news source for really just aggregated news. Want to give the best news to people so they can make the best decision instead of just a single source of truth. We want to give all the sources of truth. So, exciting stuff.
So you say energy. Is there any specific type of energy, like is it oil and gas or solar, wind?
Yeah, so mainly oil and gas in terms of like investments. And then also mineral rights has been another thing that's come up recently. With some of the deals we're fundraising for with mineral rights, you're actually able to use 1031 exchange funds. So that's a unique opportunity as like the real estate market, as we know, has, gone up with interest rates. Individuals are seeking different investments. So some are taking more control and they're like, hey, I want to purchase a short-term rental and, really just control it more, right? Run their own business, if you will. While others, will continue to buy real estate, but there's a third group that's then saying, hey, like, I don't, want to play in real estate, but I like the aspects of real estate. I like the cash flow. I like the tax depreciation or the tax advantages of it and depreciation and an exit multiple aspect of which energy has those, where we provide the mineral rights and oil and gas deals. We've looked at, hydropower. That's a fund we've done previously. Wind and solar deals we haven't executed on, but there are a couple people in our circles actually that are looking to purchase solar or land for solar and get that going. So, whenever we find a plot of land in Texas that, is advantageous to do solar, we'll do solar. So, in due time for it all. Energy for everyone.
Yeah, absolutely. No, I love that. I think especially as we continue to electrify stuff, like we're going to need more and more energy. Obviously, solar is a part of it, but, and forgive me if I'm wrong, solar, you need a whole lot to get a decent amount of electricity, correct?
Yeah, I mean, it's just like a process of how you're getting it, how it's stored, and then also how it's being, let's call it, transported. Because the other piece is like you can collect a lot, store a lot, but you're losing power along the way, right? There's kind of a half-life to it, if you will. So it's best when you have, call it, solar panels on your house, direct in, store a little bit, use, and then it essentially dissipates versus having kind of that transportation, just like you would in an oil well. You would, drill, have the oil, and then bring it along. But in that analogy, like you're losing power along the way, right? Because of distance, because of time, things of that nature. And so it's just a dependency, right? Technology is always improving, and it's good to have the diversification of electricity. Fortunately for, the oil and gas business, oil and gas will never truly go away because it is a good flux opportunity. Hey, let's drill more. Hey, let's, that type of thing. You can't, just increase electricity from, the sun, although, the summer days are nice when the sun's out, regardless of the temperature. You will still have that, diversification of energy. It'll just depend where you're at and how much, and things of that nature. So,
hey guys, this is Jordan Moorhead here, and I wanted to ask if you could do a huge favor for me. If you could go leave a review for this podcast wherever you're listening to it, that would really help me get this into the hands of other people that are interested in information about Austin real estate investing, and I'd be able to help more people. Thanks, guys.
So I actually didn't know that you lost energy transporting it with electricity. Does that happen with all electricity? Is that just akin to?
Yeah, I mean, you just have a natural piece. So one thing to look about if you're bored, maybe not before you go to bed, so you don't go down a dark YouTube rabbit hole. Is vampire power. Which is just essentially your outlets are always live, right? So there's always electricity to it. So you'll never have, $0 or zero like wattage essentially of electricity. There's always something, which is why I pay, PEC for, I own a couple lots next to my short-term rentals. And I'm always paying something a month, right? They're always something that, has that ability because we have a direct connectivity and it's always live, right? If you turn something off, then, well, there's no power going to it. So you plug something in, well, nothing's going to happen, right? So, removing things from outlets to reduce vampire power, can certainly save you money if you want to be super energy and super, penny conscious. Not that anyone, I think, should really go out of their way to, prevent or reduce vampire power, but it is an opportunity to say, hey, turn off, lights as you're, going out, things of that nature. But there's also just to keep the power grid, alive and well, especially during peak season and peak times during the day, because we all love our AC and, it'd be unfortunate if, because you and your 97 monitors that you work from home, cause a power outage and, we don't have AC. So be a team player.
Do you know how much, relative? So let's say a light bulb takes 100 watts when it's on. What about a lamp that's just plugged in but not on? Do you know what that would take?
It's in terms of like the cost or like the amount of power or
amount of power. Yeah.
it is low. There's
Just
calculators, kind of out there that you can look and see. From what I remember doing it, it was like less than like $100 a year kind of thing of, potential that you could save if you're being conscious to it. That was, maybe 5 years ago. So certainly energy prices have changed as well as technology has changed because there's more energy saving type products. But again, these really aren't, things that you're going to, I would think really, focus on. Your time would be better used, making more money or just, being aware of it kind of thing. So, but it is interesting.
Yeah, that is really interesting. So cool. I did not know that was a thing. I just assumed it's off. It didn't, well,
Sure.
Makes sense, but it seems like there's a lot of opportunity for increased efficiency with things like power grid and using oil and gas. And yeah, oil and gas is probably never going to go completely away, but how can we figure out how to conserve it as much as possible would be cool too.
Yeah, definitely. A desire for just-in-time type, energy, but there's a lot of logistics and also, politics around it, regardless of the type. And so, it's a constant battle. Consumers also change, preferences a lot, just like they do in real estate sometimes. So it's really just, riding the wave and having the kind of consumer-driven economy that we have, drive things, right? We now have more EV vehicles and EV power charges like in homes because there's a desire for it. Is it more efficient? Is it more energy sustainable? The answer is no, but certainly it is desired, right? So.
Yeah, no, that's really cool. So I think you said you do have one fund open right now. You have opportunities to invest in energy.
Yeah, so we have a couple, either accredited or non-accredited. And then I think we have like one or two more coming. So, really, I would say if there's interest in, talking on energy or really just syndications in general, reach out, let's talk shop, see how we can either, work together on a, GP type engagement or really just, share information. If it's not a fit, we're extremely particular on the energy side and are again rolling out kind of the real estate side of things, one with the media company, and then we'll also be working with real estate syndicators, collectively between, all of our different companies and things and stuff we've helped raise. It's been, I'm gonna give a random number because I don't remember the exact, but we've done, like 20 million of like direct funding, right? And then we've helped market and support north of 100. So it's not our, first rodeo by any means. And so we now have that ability to ensure that, the projects that we're working on are, healthy, sustainable with good operators, that are beneficial for, the investor, to really ride that wave, of those benefits to diversify from, real estate. And then as we go into real estate, then, same thing, right? Do they fit the same criteria and not just be a, another real estate deal that we've heard all the time that, may not actually be, that's on a lot of, what is it, informed optimism or something of sorts, right? It's just, oh yeah, this will be great, and like the markets will increase and all this stuff, right? Like being truly aware of what can happen both next year and in the coming years as we get to election, as we get to, interest rates, things like that, as well as location, right? Like Austin's a great place, I would say fundamentally to invest at any stage of like beginner investor or more seasoned investor. There's absolutely still deals. It's more of creative financing, creative finding, as well as creative lifestyle. So.
Yeah, absolutely. Love it. So I think what you just said there, Austin's a great place to invest, and I agree, but why do you think Austin's a great place to invest? What makes you excited about investing in the Austin area?
So by trade, I'm in tech. Originally cut my teeth in commercial real estate, and then continued on with commercial real estate tech. And then now, in the tech sphere, supporting Sandstone and, my own endeavors, where this concept around the startup sort of community in Austin is that we're Silicon Hills, right? We're not Silicon Valley, we're Silicon Hills, right? And so from a commercial real estate standpoint, I then look at, the development that's happening on Red River and around Rainey Street specifically, where you have these buildings that are being built, right? Skyscrapers of sorts, of mixed use, parking, hotel, retail, and, living condos. I don't think they're apartments. I believe they're condos. And so you have that, right? But those are being built by New York developers, right? So there's a certain level of class and sophistication that's coming in. One, two, you're seeing the coast fold in terms of money, and that also relates to kind of the fundraising or really just startup scene, where you have people as well as funds coming into Austin specifically to then live a similar California lifestyle, kind of New York lifestyle of sorts here, of which your, price, or not your price per, but your per capita income per capita, right, is slowly increasing, especially as you have these Fortune 100 type companies having dedicated office space, the Facebook, the Googles, things like that. You're now just fundamentally creating a mecca for tech and allowing these companies to diversify their workforce. When I was in commercial real estate, mainly focused on portfolio office leasing. So companies that had several locations across the country, seeing, what they could take as opportunities for workforce, for, their office space, for tenant improvement, the amount of lease space, if they need flex space, all that jazz, right? And so because that's then become within Austin, you are seeing that trend increase. You have companies, moving here. I haven't checked to see like what's the new company moving here, but Tesla previously was a really darn good example. So you have people moving here, you have people developing here, and it's just one of those things that, that ball is really starting to roll, and you're having the money come in, you're having gentrification, and people are, staying here. You also have people visiting here at a constant influx, that people are then, yeah, Austin's pretty cool. Like every other day it's, I'm new to Austin, or it's, hey, I have a friend coming in town and I'm going to show them Austin. With those things, there's just the natural great storm that is a upward tick in really just the investment from a purchase price standpoint of demand, but also then of supply of humans who want to interact from a commercial real estate, think retail, office, industrial type of interaction, as well as with homes of, oh well, I make X at Facebook, therefore I'm going to be here. And then slowly, this is just natural within cities. You just naturally see the primary markets then bleed into the secondary markets and tertiary markets, right? As we see things float more and developers build houses into these cities of, New Braunfels and kind of San Marcos. Buda is another, clear example, as well as up north. Kind of Pflugertville and therefore. So those are, the main reasons I enjoy living here. So that's another reason why of sorts I'll continue to invest here. There are drawbacks certainly of the, property taxes, right? Which is just, what you take the hit on, especially from an investment side. But the other thing I'm recognizing and still the decisions still out there, right? Where trying to find a company that would give a second home lien on an investment property in Texas basically don't exist, right? And so as I look at diversifying and increasing my net worth and portfolio and just fundamental leverage, it's been great to see the numbers increase for my portfolio and the investment properties. But if I can't access that capital, that number on a Excel spreadsheet that I have doesn't change my life, right? And so that is something I'm aware of, to say, hey, where is another investment of which by doing that I could then leverage that to then bring over, and you really start building the concept of being your own bank with the liquidity that you have in some of these properties, which I've also explored with my primary residence. So a lot of detail and explanation there of things from the real estate side of things, as well as the people. But I thought it was important to go through that, mainly because I have the experience of it and strongly opinionated about it. We'll see how long I stay here, or maybe I'll stay here forever and always. We'll just have to see where the wind blows and I flow. So.
Yeah, no, that's awesome. And I think you mentioned a few things there. You were talking about all the mixed use buildings being built down on Red River, Rainy. So the one on, I believe it's the one on Red River and Cesar Chavez is going to be the next tallest building in Texas.
Yep.
And that's a big mixed use building. So that's huge. You also mentioned places like Tesla. Like I think we all talk about the Teslas, the Samsungs, the Oracles moving in town, but I read a good fact or good stat about a year ago that said, hey, for every one of those jobs, there's 8 other jobs that come in with it, like the suppliers.
Okay, sure.
For Samsung.
Yeah.
And Tesla and all that. And I think that's something that people really don't pay attention to. So they say, oh, Tesla moved here, but there's not been a big one in a while. And I'm pretty sure there has. But then there's all these smaller companies that are going to follow them to work with them.
Have you wanted to be part of GoBundance, the tribe of millionaires, but just haven't hit that millionaire status yet? Well, now you can, not even being a millionaire, by joining our new program, GoBundance Emerge. My name's Jamie Gruber, creator of GoBundance Emerge and member of the GoBundance community. And now you can join. GoBundance.com/emerge, GoBundance.com/emerge. Use code Jordan for $100 off this 12-week goal-setting program and mastermind that'll propel you to being a whole life millionaire.
Yeah, because they have to, right? There's workforce investment opportunities around the Samsung, building. There's people buying up plots of land just to surely be ready for the commercial real estate boom. Really focusing on the positive externalities and the negative externalities that come with big movements, right? Can really help you understand where things are going to go. That's part of the reason why, or a main reason why, one of my factors when I buy property is to buy near vacant land. You're buying in an area that is sustainable for the long term. We're not buying in BFE, if you will, right? But it's to say that with that land that then is going to be built, that then is going to build commercial and bring more jobs and bring more people, that then brings demand, right? So I, as an investor in them, for the individuals who have not yet invested in real estate, who are trying to grasp this concept, it's like buying Google at $500 a share, right? It's buying beforehand, before they have that big release of things coming up with real estate, buying before that shopping mall gets developed down the street, which is where I bought in Austin, of more housing developments being built, as well as shopping center that continues to be built, is just going to naturally increase demand. And all I've done is just live. So
yeah. All you have to do is buy it and hold on to it. You don't have to do anything crazy, or buy it and live in it.
Yeah.
Buying in the path of progress is a magical thing, because if you bought and buy Tesla a couple of years ago, they were in the hundreds and low 200s, and now they're up in the high 3s for a lot of those houses over there. So you bought the path of progress. You knew the city was going to grow that way. There's nothing out there, and it's close to downtown.
I knew it was going to grow. I was surprised at how much it grew, right? So my house, this house here, when I purchased in late November of 2020, I think appreciated 34% 0.8% or something like that, right? And I put 10% down. And so, it's great, right? But up is always good. It's just, didn't expect that much up. But again, it's one of those things with, real estate to say, if you always look at, getting in the market but never get in, I mean, you're just watching. There's never a best time. There are, good times and advantageous times for sure. But that's just always been my opinion and also my like risk tolerance and portfolio, to say, even if I purchased like the worst, house in terms of price and I lost, so much money on it and this and that, like I'm still living rent free because I'm house hacking. That it allows me to do, other things, which is how I've built my portfolio over the past couple of years is, through that. So whether it appreciates or not, and that's what people tend to focus on. People I feel as an investor, as well as just a general like homeowner, don't tend to focus on like what it allows them to do as well, right? Share family moments, give them, cash flow capability to live that lifestyle, things like that. If we only focused on appreciation, we'd live in random places and that would also be, on the outskirts, just waiting and hoping that someone comes and builds next to us. So that way our property value increases. I don't think that's the way to best live life. I think there's definitely a middle ground. And that's why opportunity zones for me have been a key highlight, because they naturally have the investment that's being marketed to come in. So that way there's, tax breaks for developers and for investment to come in. That's been kind of the middle road for me, as opposed to, again, there's land and, I'm not near the city, not near friends, not near family, like all those kind of things. So.
Yeah, that's great. And I think what you just said there, about, let's say, house hacking, owning a home has some of these same benefits, but house hacking, like everybody's looking for cash flow or appreciation. But I think the biggest benefit of house hacking, like you said, was you can live for close to free or free, and then you can go out there and start a business or quit your job and get a new job or take on a side hustle. All these different things that maybe you didn't have the space to do and you had to pay that $2,000 a month rent.
Yeah.
I think that's the biggest benefit.
Taxes has, passed, right? So I don't like to think about it till at least November. But when I say that, it's to say you can also take that depreciation, right? That depreciation also reduces your taxes. Now, I learned as I continue to increase my income, especially over the past 4 years since I moved to Austin, it's then to say there are limits of how much depreciation you can actually take to offset your income. But that's also another advantage, right? And then,
not if you're a real estate professional.
Well, you win this round, my friend.
And talk to your accountant. There's not easy ways, but there's ways that anybody can be a real estate professional. That's not just realtors. Just for, it's you have to spend a certain amount of time, and I'm blanking on the amount.
I believe it's 750 hours, and you have to spend more than 50% of your working time doing it. So property management and facilitating and buying and just the whole 9 yards, right? It's not a, hey, I have a W-2 and I do it outside of it. I think the IRS specifically now calls that out. And so, you want to be aware of that. One thing the IRS does allow, that's one thing that I've done, is to say you live in the property, you house hack, then you're going to take that property, rent it out, offset your debt to income ratio so that you can buy, another property. Maybe you house hack that, maybe that's the family, house, whatever your path is, right? Then that property that's then an investment property, however long you hold that, you would then be able to 1031 exchange that into, another like kind property. Again, we're accepting it for oil and gas investments, but typically you would, do real estate to real estate. And so with that, because you're doing a 1031 exchange, you're also allowed to take the depreciation recapture as well with that. So when I sold my Colorado property about 2.5 years ago, I was able to keep 40 grand of, let's call it equity, to then buy that other short-term rental, where if I was just selling it like a, kind of normal person, I wouldn't have been able to. Certainly there's that opportunity, and there's also the 2 out of 5 year rule, right? You live in the house as a primary residence for 2 out of 5 years, and then you have capital gains, or you're not subject to capital gains, because that's another advantage with 1031, is not just the depreciation recapture that you're forwarding into a new property or investment that is a like kind, but it's also then the other pieces as well. And so that's another opportunity to avoid capital gains. So, I mean, that's really where I think the cheat code is coming back to say, if I've, lost some people there, like that's an opportunity to invest in Austin, right? You have kind of the cash flow. Maybe you're paying a couple $100 a month, house hacking, something like that. But it's you're making 3 to 5 year moves, maybe even 10-year moves. You're not, just thinking about today. So with this move, I'm then able to do this or this, which then compounds into this or that, right? And you just have those things rolling, and you can continuously use those strategies as long as the United States government continues to support 1031 exchanges, which was threatened, I believe, a year ago, maybe 2 years ago.
Yeah, they threatened it a bunch. They always they talk a big game, and
they always, will, I would say, right? It's the amount of money. I think it was in the trillions, I believe, of money that 1031 really defers. I was looking at it earlier for a presentation I have later. Regardless, it's just to say that the government allows you to do the things that help support your lifestyle, keep your life happiness index high, right? Mm-hmm. And also, prepare for these things, be aware of these things. Hey, you got married and you had this house hack, so now you want to move somewhere else. Well, great. You just have a strategy that, can allow with that, right? I think oftentimes, especially with house hacking, I've seen this with people that they are hesitant to do it because they want to live on their own and not kind of make that sacrifice. And because of that then hurts their, future for when they are the future, they are, married with kids, things like that. That's all that is sacrifice. Right. And so it's just what kind of, hard things, if you will, do you want to do? And my thought process has always been, this route because of the income capability, and the community capability. My social life's a little bit more lively, if you will, because there are other people. I live with great, amazing humans, which is another thing, right?
Yeah.
But again, that's also helped me from an investment side do things that I wouldn't otherwise be able to do. I've been able to save so much that I could then purchase the first short-term rental that I had. The second short-term rental I have was purchased from that 1031. I mean, those things they're not unheard of, right? But again, it just gives you that opportunity, or blow it all and go travel the world. Like I would say credit card hack, and do that. But yeah, I mean, there's a lot of options within the Austin market that, regardless of price or intention of things, you can still take advantage of. So,
yeah. And I love that you're doing the hard things now so your life can be easy later. And
for sure.
What you basically just demonstrated was, hey, here's all the ways that I can use these strategies, my house hacks, to compound on themselves and have all these bigger investments with it. So that's absolutely what's worked for me. And it continues to show up more and more in my life of, like you said, with the strategies, the 2 out of 5 or the 1031. If I want to buy a bigger property, I could sell a smaller property and I've got the down payment sitting right there in that smaller property. I don't have to save up every penny. I might have to save up some of it, but not all of it, because I made the hard decision in the beginning, and house hacked was essentially what it boils down to.
Yeah. And it gives you flexibility. And I think that's one key thing that you were alluding to. I could also house hack and then kick all my roommates out and, live by myself, right? Or maybe it is with a significant other or something as well. I go 1031, I go, investment route, all these different options. It's easier to steer a moving car, right? So if you have a property that you can then, steer with, you're already on that, path. You're not in the game, then
all of that. It's easier to steer a moving car, essentially saying you have options when you make that initial choice. So let's say house hacking, you start to house hack, then you can make those decisions later that you would have never been able to make. I mean, it's the whole thing of the renter's net worth versus the homeowner's net worth. But when you do that with house hacking, you get to do that multiple times. So people say, hey, the middle class was built by home ownership. But you know how you can easily get wealthy is house hack a few times. You know, if the middle class was built by home ownership, meaning one home, think about what you could be if you house hacked and turned that into 5 or 10 or 20 homes. Like that's it's just astounding how big your results can be.
There's a crazy statistic that, and I would need to look it up to confirm, but I believe it was in the 90% that 90% of individuals in the United States do not own like an investment property or a second property or something to that nature, right? I mean, it gives you that opportunity. So.
Yeah, you feel like you're in a rare bunch when you own investment property, but typically us investors, we tend to hang around other investors and we hear about Frank over here that's got a couple hundred units. And you're like, oh, I don't have anything. But the reality is if you own an investment property, you really are a small portion of the population.
Yeah,
just one.
No, absolutely. Yeah, I love the people that are always like, I have 500 units. It's like by yourself. It's like, no, not that it's a bad thing, but it's always comical to me, like how just people maybe like flex on it by all means. And I've really focused on the who's a wealthy individual in all aspects of life, right? Like the individuals in our circle, not just you have 500 properties, right, or 500 doors, right? Maybe you have 500 properties too. I don't know why, but yeah, it's always interesting. So especially as you are, networking or buying or things like that, it's doing it the right way with the right intentions, not just doing it has really been my shift, especially the past couple of years. So, and it's proven to be fruitful. So,
yeah, absolutely. That's awesome. Paul, do you have a biggest mistake you've made investing in real estate? Is there something where you're like, oh man, I'm not going to do that again? I've talked about it a million times on this podcast, but for me, it's really paying attention to due diligence. I've definitely overlooked some stuff, and that's come back to bite me big time in the long run.
So, a lot of things come to mind. Both short-term rentals were properties that were purchased and renovated and then sold, so no one was living in them, or they were like kind of living in them. So there were a lot of small things they were the wrong kind of like door handles, and you could someone could lock themselves in the bathroom and no one could get in, kind of thing, or just random little small stuff like that. In addition to the water pressure wouldn't work correctly over a period of time, or just all those kind of things, right? And so that is one thing that I'm hyper aware of, where if I purchase something that was a renovation, especially as, we still have some, house flippers, or we have individuals doing scrapers. And I do want to come back to me on the scraper comment, where I would be, aware of that. That's really just, hey, I'm going to try to be more aggressive with negotiation. But candidly, you can't really tell, and people are going to be like, you're way too detail oriented, and we're going to, not move forward with you, right? This is too much. So really, it's to say both the short-term rental properties I purchased, because they were also renovations, granted, it was a little bit of the market, was not using a real estate agent that I not necessarily trusted, but it's to say a real estate agent that I trust and plays poker, right? And I say that because we can look at the comps and we can say that, this and this and all this stuff, but if something's on the market for, 60 days or name whatever timeline, right? And they're bleeding a little bit, from a investor standpoint and a poker standpoint, let's press on that, right? Mm-hmm. And so that's not the individuals who, closed on those properties are great individuals. They know their stuff. We did what the market, said. April of 2021, I believe I overpaid a smidge, but I've also made that up in equity. I own land next to that property. It's all good, but what if kind of thing, right? And so that poker playing thing is really to say that's my experience of kind of the thing that I, hurt myself, if you will, from an underwriting standpoint that I believe. And as I go forward and advice to others, have that individual, in your pocket, to have them push and find ways that you can make it a win-win for your agent. Your agent is going to get paid less because they're, playing poker and really kind of fighting against their own commission. So are there other opportunities to, maybe incentivize them or, just have just that kind of agreement of sorts, to have them play a little bit more poker, especially when there are the unique properties that have, home and land, which is not everywhere, right? That is like a big thing that I'm focused on now. Whenever I purchase more real estate, honestly, with the land I have, like I'll just build. I'm probably done of me owning personal real estate. I don't like those calls or the logistics. I'm more focused on syndications, building anything software and digital related. Again, the websites. We're actually also building a software product that's aggregating data and news for energy and for real estate, be using our energy news sources, right? Like that stuff excites me, is awesome, things of that nature. A scorpion in one of my properties, I definitely want to get it taken care of for our guests. But by golly, like just let's spray more and put some traps and like, let me go back to work. Right. So yeah.
Yeah, no, having an agent with the aligned interest is really important. So I think, correct me if I'm wrong, what you're saying is, your agent wasn't as aggressive as you would have liked trying to get the best offer for you or get the best price for you, but made offers to get the offer accepted.
Jordan Moorhead here. Really quickly, wanted to tell you a couple other ways you can keep track of us. If you want to listen to all these podcasts and ask questions, the Moorhead team on YouTube is the best place to be. And then Austin Real Estate Investors on Meetup is a great place to keep track of all of our meetups we have going on.
Is that what
because Austin, as you know, and people probably know, has just been a tough market to be in. It's more to say like when there's but both of these homes were on the market for somewhat of an extended period of time and weren't really getting a lot of looks.
Yeah. And, in 21, 60 days was like an eternity.
Yeah, for sure. And so the sellers both played poker. They were also representing themselves, right? So they had a different perspective, right? And a vested interest. But for example, one of them, to just kind of go in the meat of it, was saying, hey, like, I'm either going to like accept yours, like you either give me a good offer or like I'm going to refinance. And so it's like, okay, like, and we don't know, right? But in the grand scheme of things, like, it's just like, well, they said this, right? So there's a difference in, and I learned this from like commercial real estate. Like there's a difference of, because I fundamentally believe a difference between residential and commercial real estates of sometimes how they act, right? Nothing, bad against things, but just when you're going at these unique situations and someone's playing poker, the ability for someone to play poker back is, just transformational, but that's not needed in every market at every time, things like that. So I want to make that very clear. But it's just to say that they were able to, play poker, and we just kind of took the information, that we had, instead of kind of playing poker back. Playing poker back also means that, you'd probably lose the deal. Like there's a higher chance of that, right?
Sometimes, yeah. I think that's the hardest thing is you got to be willing to lose a deal. Whoever's open to losing the deal wins.
Yeah. That was kind of my downfall of sorts, is that these are such unique properties with land, that the, cash on cash and really just long-term return is just absolutely like, I would have to make the Excel sheet or the cell in my Excel booklet bigger, right? Because there's so many numbers, right, that would come from it, right? So it was just, worth it. Again, it's just a hindsight 2020, wish we would have played a little poker, but I also realized like, I like, playing the poker of it, right? That's why I was in commercial real estate, cutthroat through and through. I had one client use us for 2 months and said, or it was like 4 actually, they weren't going to sign an exclusive agreement. They were going to sign a contingent agreement of if they resigned in their building that they, wouldn't like basically give us the commission, which is already paid for, right, from the property owner. And after touring them through, basically every office building in Denver almost, they were like, no, we're going to stay here. We really appreciate your, hard work. And we'd love to use you in the future. It's like the lack of you signing this line it was like $3,000 or something, that would have, paid for like food legitimately.
Yeah.
We're just like, no, like, we'll use it in the future. The price of what they got that lease for wouldn't change whether they signed a line or not. Right. And so it's just like, man, sharks do shark things. So
yeah,
eye-opening.
A little different in residential.
Yeah,
Well,
for sure.
Paul, and we'll go back to the scraper thing here, but I really want to talk about what's next for you. What are your long-term goals and what's your vision for yourself in real estate investing? I know you said you don't necessarily want to be so active and hands-on. You absolutely do want to still invest more passively in syndication, stuff like that. But
yeah, so syndications
goal?
for diversification and just different opportunity, right? Especially in different markets, since I am very Austin heavy with these three, in Lago Vista, in Austin, and in Canyon Lake. So I have the full corridor, right? But it's to say development is going to be an opportunity for the plots of land that I have. Those will then be short-term rentals, of which I can create, my own short-term rental company where I'll have, 4 properties that can be managed, individually or as a group. And then those funds, have enough funds to, be my own property management company. I don't desire to create a property management company, but it just naturally will flow. Other than that, specific investment could certainly look like, doing some maybe mixed use, commercial property. That's kind of, TBD in terms of like, hey, it's an office space for Sandstone, or, maybe it's just a commercial building for the sake of commercial building. The piece is I just don't want to manage it, right? It's like choose your hard, and that's just a hard that I just don't want to experience. So people who are managing a fund, right, or managing the property, like that's going to be, on them. Really, as I look, to my, 5-year vision, and more importantly, focus on the 3-year, is to say I have what I have, allow that to sustain and increase, as it would. Focus on, the things I've mentioned with Sandstone, specifically the software aspect is what I'm very excited about. That's a lifelong dream, is to build a software company and have it progress into something that, I'm proud of. Whatever the, dollar amount or, number of people we employ from it will be what, users want. But just that aspect of building Legos is just very exciting. From there, yes, more real estate investing, especially as we, build our own syndications within real estate, because that's the super long-term goal. But for just me personally, yeah, it's just, kind of playing T-ball, getting kind of base. But definitely with Sandstone and the future, looking for, home run hits, trying to get maybe 100 or so million assets under management through syndications would certainly be, a good goal. But I want to do that as a we. I've switched from a me to we. And so how, what is the type of person that does we investments? And I've changed and transformed a lot with, compassion and understanding and communication and financial just knowledge and et cetera. That like, that's the direction I want to go with that we. So.
Yeah. What is it? You go faster alone, but further together. I think, and it's a lot easier together too. I know being in a partnership and I did it all on my own for years and years. And I got into a partnership, and it's so much easier. We've scaled so much faster. So
yeah, absolutely.
I love that. Great goals. Paul, do you have a favorite business or mindset book that you like to recommend to people?
One recently that I just finished reading was Into the Magic Shop. The other
What's that
one,
about? I know that's
it's a story of someone who achieved extreme financial abundance, but realized his. I'm also trying to like not give it away, but then realized that there were more important things. So basically his eyes and his heart were opened as he, became worth $75 million. Right. Wow. And so it's that type of like foresight to say, hey, in my 10-year vision, I want to be worth $75 million. I don't, right. That's not a number I aspire to have intentionally. But it's to then say today, like, how would he have changed or approached things? Right. How can I give back more, serve more, be more intentional, create ripple effects in myself and create and allow others to create their own ripple effects. Those things are powerful. And one thing that has helped me not sleep, I'll continue to say those words, is to say the book 10X is easier than 2X.
Great book. Love it.
First 20 pages just like are vastly just transformational. I'm changing my one sheet. I'm intentionally, changing some things from Q3. I mean, this is 20 pages into a book, right? It's dense with the thought that come from reading the book. So it just depends, I would say, where someone's at, if they do have the foresight of the future, or they need help kind of creating it of sorts. So, because I've lost myself towards, a wealth and investment path, right? And it was a eye-opening piece, again, into the magic shop. And then now it's to say, let's grow and scale, the most appropriate, beneficial way for, humanity. And yeah, I'll be benefited along the way, whatever that turns out to be.
Awesome. Yeah, no, I can't say enough about 10X is easier than 2X too.
Yeah.
I'll have to check out Into the Magic Shop. I have not read that.
Yeah. They're both GoBundance books. So good stuff.
I knew I heard it, but I can't remember where I got it from. They sent it out to us.
Yeah. Well, they sent it out to me. I don't know, but there's a lot of books that I get that I haven't read yet. So
when did they send it to you? Maybe it's in a pile somewhere.
I don't remember when they sent that one to me because I just got 10X.
Okay. Yeah, I just got that too.
Okay. Yeah.
I'll have to check. I have piles of books. Every year I sell tons of books because I just end up with too many books. So I put them all in a big container and I end up selling them all to half price books just because I want to get them out of the house.
Well, you can always donate to me if you.
I'll call you next time. Don't worry.
All right, deal.
Paul, what's the best way for people to get a hold of you?
Honestly, I'm pretty active on Instagram, not as much on Facebook or LinkedIn. I would say those are the best because they're consistent, right, with just my general life. And we can also remember what my face looks like with a way to contact me. I've been trying to get away from text messages and emails because I just fight every day to get to people as I can, and trying to remember or this and that just isn't as beneficial, as well as I want to, build relationships with people. Looking at a phone screen of how was your day is very different than, oh, that's really cool. Like you just got back from this trip or you're doing this, right? I'm about to go to Greece in about a week and fulfill a bucket list. So it's those kind of things that, oh, check out this place, that are really or that they change my life, right? And so those things that do that, those types of interactions, those relationships, and that opportunity to do that, those are things that I want to continue doing. So
what's the best Instagram for you too, Paul?
My Instagram is PaulieG303. So 2 L's, 1 Y, and then a G like Graham. 303 is the area code that I grew up in. So
okay, and we'll have that up there. Paul, I know we're running out of time here. I know you've got a 5 o'clock you have to be on. Really quick, what is the scraper? I think I know what you're talking about with the scraper, but I'm not really sure.
And it's always like finance or like real estate terminology that it's like, oh, I call it a, potato. Oh, it's potato, whatever. Or people may not know about it, right? So it's just, if I were to invest in real estate today, because we were talking about this a little bit, before we recorded. Real estate today in Austin, what I would focus on are properties, maybe I could get a subject to on, right? Or, maybe I could just afford outright to, house hack. But there are areas in Austin that they're taking and I'm going to make some of these numbers up, right? But just a, $500,000 home, or maybe it's, lower on the 3-4 side. And they're, scraping it because they can then build, the $1 million house type thing, right? Yeah. And so my point is to say there's an opportunity where if a homeowner is not aware of the highest and best use of their property, which is a commercial real estate specific focus, term, then they'd be more than willing to sell it for $400,000. Absolutely. That's what the, potential market is. However, you scrape that, you build that, it's then worth, 800 or whatever the numbers are, right? Same thing with parking lots, right? You can sell the parking lot as a business, or that parking lot can become, a $16 million mixed use office building, right? That's why Rainy Street specifically has, gone down the hatches, because it's a highest and best use for us to develop like this type of property, right? So those types of opportunities, I would certainly look at, or opportunities where you can put a ADU, accessible dwelling unit,
accessory dwelling unit, I believe.
Yeah, that one. Yeah. Something with an A. That's another opportunity to house hack, but maybe with privacy, or just have that house hack be separate. Like those kind of things are absolute cheat codes to a traditional house hack that, people might be more willing to explore. Because maybe they can afford the $400,000 house and they are just going to, live in it. And they do see these nice houses going around, but you can kind of ride a different kind of wave. So that's what I would say today, could do. And I don't know, there've been a couple deals that I've looked at that I might invest in, but at least not today. So, yeah.
That's awesome. Highest and best use. So that's the key in Austin, is finding the highest and best use.
Yep.
Completely agree.
Absolutely.
Awesome, Paul. Thank you so much. Yeah, there you go. Thank you so much for coming on. Make sure to follow Paul on Instagram at PaulieG303, 2 L's, IE 303.
Oh, it's a Y.
Oh, thank you for the correction. PaulieG303. And make sure to follow me on Instagram at Jordan Moorhead. Thank you so much. And Paul, we will talk here soon. I'm sure I'll see you at the next Go Abundance event here too.
You bet. Appreciate you, Jordan. Thanks all. Take care.
Thank you, Paul.
Yeah, see ya.
Bye.